Hello friends, welcome back to my channel. This is Jamil once again. So today we're going to talk about the Nasdaq 100 indices, where he can move and how we can trade on this into this indices. So first of all, if we saw the last candle as a daily time frame, it has made completely engulfing bearish candle. So and if we saw the price action, market was about to go on the higher side and he take first retracement, and the buyer has come last day, and seller has able to uh, closing below the previous trend. So that means seller are more strong and more confident than the buyer, because last time the buyer has previous high was about 15,200 nearby something, but this week this candle has not able to cross the previous swing, which is 15,200. Now market has the second high, the for the buyer was 15,100. So almost 100 point buyer has been down from the last swing. And today was completely game changing moment time, because the seller, once the market slightly open on a gap down, then buyer was become a totally panic. And there is a sign, if we switch on the 50-minute time frame, it can clearly show here. Just let it be loaded first. Yeah, here is the 50-minute time frame. So just the market, the way the market has opened as today on 15 time frame, it was completely a buyer zone, because the last time buyer has been activated from here, from this swing. So this swing was important for the buyer, but the market exactly opened on demand zone, but they cannot hold the position, because these are the buyer. Once they saw the market has going to operate in the negative even in the little bit of gap down, they start to square up their position. They aggressively going to start up their position, and within 15 to 13 minutes they become a seller. So this is the reason market completely has fall sharply for today. So how we can trade today for intraday? For tomorrow, so let's switch on to the daily time frame. So there is a couple of things I wanted to show you on the daily time frame, that market completely giving us a sign that he is completely now a negative. First of all, in according to the price action, market cannot go directly on the higher side, and FNO segment and indices market cannot go on the higher side without any seller. Buyer cannot take the market onto the higher side. Definitely buyer will take the market on the higher side. Seller will come. This will make a retracement. Then buyer will take the previous high into the new high. So this is how the uh, higher high pattern become made, and the market will go on the higher side. Generally, this is the initial and common rules on the market. So at this stage, if we talk about the market has completely become negative, as I draw if I draw it here, there is a trend line. There is a strong uptrend in the market for the buyer. Then seller first time has entering the market, and they make a retracement here. It is a normal, very normal. This retracement as buying, this retracement giving you the opportunity for the buying. Then second time, these are the moment time completely was look like a confidence buyer, that they able to break the 15% 200 level, and they could make a new high. But once the market has opened slightly gap down, as we saw on 50-minute time frame, that 14 at least for 40 point, I think 40 or 45 point only, it is a normal, it is slightly gap down, even we can consider it's a flat. Then market cannot hold their position, they aggressively fall. We already saw it here, but for the convenience I will show you again. If we look at here, these are the, still I'm saying, these are the positive zone. Still these are the positive zone where the market has opened today. This was the demand zone, because if we saw clearly, the buyer was confident. Those are the buyer who bought from here. They were about to confess, if the market going to gap up or even the flat, the market can go on the higher side. Market has potential to go on the higher side, but once the market slightly gap down, slightly open on the gap down zone, buyer not even touch in the market. He sharply fall down and go, and already done closing completely negative trend. So if I go in the day time frame again, so the things I want to show you about, these are the upside momentum for the buyer, and first time it has give us opportunity of buying. So market has buyer come again, and it take pull up and again the market, but seller has entering the market and completely become negative. And the previous buyer swing, seller has able to closing down from their swing. So that's mean it's a sign that market are going to be a negative. So how we can trade into this market? The last time buyer was activated from here, these are the buyer swing 15,000 14,700 level. So market nearby already, market has closing negative side and nearby support in 14,700 something. So how we can trade on here? Let's switch onto the 15-minute time frame for intraday. These are the swing act as a support for the market for tomorrow. But if I talk about this swing, this support is no more important here for the for the market, because last time, as we see completely clearly, that market has break out this level and he take a support and he pull back on the upside, which is very good sign for the market. But second time, once the market start to getting the rejection from the top, he fall down again and exactly the similar price he take the support. And these are the w pattern. I'm telling, these are w, if the w pattern, if we saw, if you saw in the market for 50-minute time frame or daily time frame, these are the changing momentum. So market has changed here, a trend has changed here again, and market was gone in the bullish sign. That second time already, first time, second time, third time, once the market going to face the same support level, these are no more important for the market. So seller will be more aggressive. So because if buyer are strong, buyer are confident about it, about this level, the market never come back again and again at the same range. So these are the place market has potential to go on the higher side, but he fall down again tomorrow. So this the enough sign there is, here is the enough and multiple sign that seller are more aggressive than buyer, and market can fall down at least for 50% this trend. If I zoom out this chart, you can guys see clearly here, these are the very strong for from 13,600 or even more than that. My chart not loading here more. So if I draw the line here, these are the very strong bullish pattern, very strong. Buyer was very uptrend. So each and every swing buyer has come, each and every swing buyer come and buy, buyer come and buy the market. So right now the seller from the top, we already find out here is the first swing for the market. Seller has taken a retrace, then buyer try to again take the pullback. The seller has again come. So these are the completely amp pattern. Amp pattern is the sign as a price action. M pattern is the first sign that market going to change the trend. It was in the uptrend, that market is about to make a downtrend right now. So how we can trade here? There is a swing 14,700. Suppose we assume market going to open and flat tomorrow. If the market going to open the flat, these are the swing will going to be act as a resistance. If market going to open in the flat, we just have to wait to see any negative candle from the top. We will trade on 5-minute time frame. Once the market will going to open here, he will definitely according to the support zone, the buyer must be will be there in here. So market once try to go on the higher side, once he will hit the resistance, then from the top any negative candle in 5-minute time frame, we are going to aggressively short here, because this the price will be clear here. The first time the seller is selling the market, buyer has taken retracement, then again fall, then again retracement, then again fall. So price action will be very clear in the market for the selling side. And an option chart, those are a secure trader, they can easily short the 15th above the 50,000 round level, 15,100. They can short the call short, call option short, and 15,200. These are the more secure side for the option seller. 15,200 you can short the call, and 15,200, these are already build up a seller selling position for the selling seller. Those already made already here. So we can easily, if we are confident, then we can also work on in the money. 40,600 and 14,500, these are the multiple round level for the market. So if you are confident on the market, then you also can work on in the money 15,000, 14,500. You can be a short and in the money 14,600. But these are a little risky, but those are secure trader, they can easily short the round level. Always prefer round level, because the round level 15,000 was act as a support here, act as a resistance. Then market, once the moment it was falling from the top, he also take a support here. So these are this round level act as a resistance and support previous time. So if the market, suppose if the market going to market has opened flat, and market continuously doing in time expanding here, and after 12:30 they make a range and it has closed, and he break out from the top and able to close 5,000 15,000 level, then market will become bullish again. But buyer need to very struggle, buyer need to do very struggle here from the bottom, because already seller in the market. So if the buyer wanted to take the market higher side, they have to struggle first, they need to continuously time spending here, they need to fight with the seller, because these are the these are the swing are already made for the seller. So seller doesn't wanted to close the market above 15,000 level, and buyer never wanted to close the market below this swing. But this swing already tested as a multiple time. So for this for the according to the price action, if market going to open flat or even in the gap down, suppose market going to open in the gap down directly on 15,700 or 14,700 level, we just have to wait for the pullback. If market going to take a pullback, closing price will going to act as a resistance. So from the closing price, we can, after seeing any negative candle, we can sell the directly in the short the market and put our stop loss here, or even 14,900. So 70 to 80 70 to 80 point will be our stop loss, and we can sell the market. If market directly open 40,700 or 750, and 5 minute time frame, if 5 minute time frame made a green candle, and as soon as it cross, we can aggressively short the market, and easily our stop loss will be here in the top, top on 5 minute candle. And second things, if market, the chances are very less, but according to the uh, anything could be happen in the market. If market going to open directly on the gap up, which is very rare, because the selling market do not prefer to open directly on the gap up. If going to this happen, that how we can handle this. Suppose we assume that market going to open 700, 14,900, 14,960. Then we have to wait for the price action, because these are the already seller are in the market. So if the market opening here, chances are very high he will take a first directly will be on the closing price, then trend will be decided. Because gap up, in the selling market, gap up market will face resistance, so chances are very high the market will directly will fall here at into the closing price. If buyer are confident, then market will going to make a double pattern from here. But if not, then market never waited here, because this level, as we already saw in the back test, that market already take the support a multiple time. So if this level will come against, seller will not going to touch the market from the gap down, from the gap up. So chances are very high he will hit the resistance, he will try to go on the higher side, then seller will come again, then market complete will fall down from this level. So both the cases, we can, the safe side will be for the selling in the market, and we can easily short 15,000, 15,000, 15,000 to 100, 15,000 200 call option we can short in the market. So the how far it can go down, if it is work for tomorrow as a selling side, there's a things. If we saw the buyer has start to buying from the market from 30,000 30,100 something level. So if this is the buying trend, that market, if this is the trend for the buyer, the market at least need to retest for 50%, 50%. If I talk about 50% here, then completely we can see the 15,000 14,000 round level, 14,500 or 14,000 300 400 will be the perfect example for 50% retracement in the market. So generally we are not going to make the target on the market, but we can let the market decide where how far he wants to go. But as per the analysis, the 50% retracement is a strong retracement. that there is a strong upside momentum, then market take a retracement 14,400, 500. These are the round level will be preferable for the market, and the buyer will definitely will try to protect after 50% correction on the market. If the market is strong, the market will go on the higher side, similar like that. So both the scenario markets look like a little bit negative scenario from the top, because market on the top already made M pattern, which is a negative side from for the market. So let's see what the market going to open tomorrow, and we already have a plan that we already made it today to for tomorrow take a trade. I'm going to remind you again, if the market going to open in the flat range, flat I mean this level 880, 40,880 and 80 40,800. In this scenario, if the market going to open in here, then once the market, if the market try to go on the higher side, he will face a resistance level from any negative candle. We are going to short here, and our stop loss will be on the top. Then if the market directly going to open in gap down, then we just have to wait what the market is doing. If he directly, if 5 minute time frame he made, if he made 5 minute green candle, as soon as it cross, we're going to short the market. Or even if according to the support, the buyer will be definitely here. So once the buyer will try to take the market on the higher side, closing price will act as a support and resistance, resistance, or even this level, each of the swing will act as a resistance now for the market. If directly opening the gap down, then he will first hit the resistance. That any negative scenario, we can put our stop loss here in the top, then let the markets fall down how long he wants to go. So to be honest, I can see for after seeing the pattern, that market potentially probability are very high that market going to make a deep, but 50% is very strong correction. Deep, I don't mean that market is going to be negative, but to be honest, 14,600, 500, and 14,600 and 500 in between, I am seeing the market. So we have now 700 or 800 point on our hands to collect it. So let's see what the market is going to open today, tomorrow. So make sure do your own analysis. I'm not saying that my analysis is definitely correct, just based on my experience, and because as I do trade and every day, so I have few experience that I'm going to share with you, just to understand the price, how the market move. So it would be definitely helpful for you. Indicator are helpful. I'm not saying indicator is not going to work. It's also a work for few people, or few people prefer to see the price action, or prefer to read the chart. So both the cases, do your own analysis, and do make sure you properly follow the risk management, because without risk management, there is no any success in the stock market. So make sure you do your own analysis, and risk your trade, and risk per trade you follow all the rules on the market. So I hope you enjoy the video. If you enjoy the video, if you learn something new, please consider to subscribe to my channel, and I'll see you in the next video, guys. Thank you.